Hi everyone and welcome to a new video. In this video I'm going to share with you my most recent investment, and as you can see in the title of this video, this is the biggest investment I have ever made in my life. But first of all, and before continuing with this video, I want to clarify that I am not a financial advisor and this is not investment advice. The, the stock I am talking about is none other than Grainger Inc., ticker symbol GWW. I bought exactly 3 shares of this company, which is more than $2,000, almost $3,000 to be fair at the time I bought them. About GWW. WW Grainger Inc., together with subsidiaries, distributes maintenance, repair, and operating products and services primarily in North America, Japan, and the United Kingdom. It operates through two segments: High Touch Solutions North America and Endless Assortment. The company provides safety, security, material handling, and storage equipment, pumps and plumbing equipment, cleaning and maintenance, metalworking, and hand tools. It also offers technical support and inventory management services. The company serves smaller businesses to large corporations, government entities, and other institutions, as well as commercial, healthcare, and manufacturing industries through sales and service representatives, electronic, and e-commerce channels. W. Grainger Inc. was founded in 1927 and is headquartered in Lake Forest, Illinois. Its industry is industrial distribution, while its sector is industrials, of course. GWW has a massive market cap of $56.82 billion, so we are clearly talking about a very big company. Year to date, it is up 18% approximately, while during the last year, it is up just over 14%. But when we look at the share price performance during the last 5 years, things are totally different. The share price grew by 226% during the last 5 years. This is very strong performance. The current P ratio is 33.76, which is definitely on the higher end. It is better than some of their competitors because there are some with even higher P ratios, but at the same time, there are some with lower P ratios. An almost 34 P ratio isn't very attractive, at least for me. It doesn't really seem as a stock screaming undervaluation at the current price, and to be completely honest, this is one of the few things that I didn't like about the stock. Their forward P ratio, though, is considerably lower. It is 27.34, which makes the stock more attractive, but again, this is nothing special. Now, let's continue with their financials. Looking into their income statement specifically, it is obvious that the revenue is growing consistently. In the past, they even managed to have double digits revenue growth, which is very impressive, but during the last few years, the revenue growth has slowed down. It's in the low single digits. The last year, the revenue grew by 4.5%. It's not the growth they used to have between 2021 and 2023, but the growth is consistent, and even the last year, it was close to 5%. This is definitely not bad growth. One of the things I like the most about the stock is that they are doing consistent buybacks, and all of these buybacks are significant too. They consistently buy back 2% of the shares outstanding each year, which is very impressive. Now, let's continue with their basic earnings per share and their diluted earnings per share. In 2020, both their basic and their diluted earnings per share declined significantly, more than 16% to be more specific. But keep in mind that 2020 was a tough year for most companies. After this year, their EPS recovered immediately, while at the same time they also managed to grow it extremely fast. Between 2021 and 2023, their EPS grew by double digits consistently, and in 2021 and 2022, their EPS grew by over 50%, which is mind blowing. After these years, the growth slowed down. In 2024, the growth was just below 7%, not too shabby, and then in 2025, their EPS slightly declined, just over 8.5%, which in my opinion, this decline is nothing to worry about, especially when it comes after many years of massive growth. Their free cash flow per share is heading at the right direction for the most part. Last year it declined, but again, in my opinion, it's not something concerning. Also, GWW has managed to grow its dividend consistently. During the last few years, it's mostly single digits growth, But as you can see, during the last 3 years, their dividend growth seems to be accelerating, which is definitely a good sign, and in 2025 it was double digits dividend growth. As for their balance sheet, I see that they have a significant amount in cash and short-term investments, $585 million to be more specific, which is a huge decline compared to their previous year's cash and short-term investment, but still I am happy with this number. It gives them options, and I also wouldn't mind it if it grew a bit. The company's total debt is $2.862 billion, which is manageable in my opinion. Their net cash debt is minus $2.277 billion. Looking their debt throughout the years, I see that it stays around the same levels consistently. This shows that paying off this debt isn't something that they are focusing on right now, but at the same time they are responsible with it and they don't allow it to grow and grow to the point that it becomes a burden. As for its dividend stats, GWW has a dividend yield on the lower end, 0.76%, which may sound insignificant, but it gets much better when you see that they have managed to grow this dividend consistently for more than 50 years, which makes this company a dividend king. Also, as I already told you, last year they grew their dividend by double digits, so if this continues, your yield on cost will be much higher and pretty fast. And I don't see why this dividend growth could stop, at least in the short term. They have a very low payout ratio of 25.54%, which means that they can easily afford their current dividend, while also having at the same time plenty of room to keep raising their dividend in the future. Their shareholder yield is 2.81%. Analyst consensus for GWW stock is hold, and when I see the 12-month forecast, I can see why. They gave GWW a low estimate of $950, an average estimate of $1,064, a median estimate of $1,050, and a high estimate of $1,300. So they expect the share price to be somewhere between minus 20.5% to 8.80% growth. So, according to analysts, even the best case scenario is minimal growth for the next 12 months. As for me, I bought 3 shares of this company because I liked everything other than the valuation, of course. I was lucky that the share price immediately grew, and I sold my 3 shares for a small profit below €100. I would be happy to buy some shares of this company again in the future, but this time I would like it to be a long term investment. Below $900, I would be happy to buy a couple of shares of this company and hold them long term, assuming, of course, that I will still like the financials by the time this actually happens, and of course, if it ever happens. Also, these shares are pretty expensive for me. It's not like I have thousands to invest every month, so I have to be lucky with the timing too. I am very impressed by this company. Hopefully, I will get the opportunity to own some shares of it in the future again. Tell me in the comments below what is your opinion about GWW stock. And also, let me know if you maybe already own some shares of this company. I am reading and responding to all of your comments. Thanks for watching and have a nice day. See you in the next one.